Facebook friends and family. How you guys doing? Today, I want to take a little time. I know you guys are working out there, and I just want to take it a little time to talk a little bit about investing 101. So, what is really investing? So, every time we have a company, that has a product or a service. So for example, I have this company. It's called Elixir Winery Incorporated. It's organic. And so what happens is every company that comes out, they have a product or a service. Okay, so this is one of my companies. So, I have a wine. It's a 2006. We're coming out with a new one at 2019. So we have that coming out very soon. So I wanted just to give you some ideas about investing today. But first, let me say thank you very much for all those who are giving me thumbs up, smiley faces, and comments and things. I really appreciate it. I know who you are, and so I really appreciate every last one of you. And if there's any more questions, comments, concerns, please give me a call or email me or go to my website, and you can get my phone number there and go from there. Okay, so what is investing? So, like I said, we have this product. Okay, so I have a product. The question behind the product for everyone who invests is this product, does this product meet a supply and demand need? Okay, so for example, this product, wine is a massive industry. And so how do you compete against something that massive? Well, of course, you can say like this one here is no chemicals, zero chemicals in the process, zero chemicals in the stopping of the yeast process, no chemicals whatsoever. What else? 100% organic grapes that we've used. The bottling is nice. The label is nice. The name is according to what we believe this product is. It is an organic elixir. It's an old school biblical contents. And what it basically means, it is the healthiest. And we have a slogan that says the holistic drink. And that's what this is. Okay, there's a product and then there's a service. Okay, we have a product. There's other products out there. So now, behind the product is who is running the company. Okay, in this case, I'm the CEO of the company, and so I'm running the company. What does running the company mean? Well, in all areas of a corporation. Now, LLC is quite different, but let's talk corporations so you have a better understanding and hopefully for your own business. In all corporations, you start off with the investor. Okay, the investor has the ability to give currency or other means to give to the company to use to make this product or grow the company in context. So making the product is what we call startups. Growing it, of course, or growing it. So we have first seeds and second and so on. So in return of an investor, so let's say you give $100 for your investment. You sign some paperwork. There's some documentations. Let me pull this out right quick. There's some documentations that you get. There's a receipt that you have for everything that you give. And then there's what we call a stock certificate. So you can look at this stock certificate. So this stock certificate is given to you when you give us the money. The certificate basically means ownership. That's really what it means. A stock certificate simply means that you are part or partial owner of the company. You're an investor. That money is safe and secure by the receipt, which is the paperwork, is governed by the paperwork, and the actual stock certificate is there to show proof of your investment. Now, what does a stock agreement do? Okay, stock agreement does a couple of things. First thing it does is, let me put it right here, right there. All right, so right there. So 300 shares is what this individual purchased. So it's at $0.50 a share, or sorry, $1 a share. And so $300 at $1 a share, that person giving the company $300, we give this person back 300 shares. The 300 shares is not individual 300, it's just one sheet of paper that says 300. It doesn't matter if you're on a stock market or in your private company. We are a private company, meaning there's an individual point of view there. Public, meaning on the stock market. There's the NASDAQ, New York, and so on and so forth. All right, everyone who buys stock has a stock certificate. That certificate then is held by you. There's two things that happens within this ownership of the stock certificate. Two things. One, every quarter, meaning every 3 months, the company, this company, once it makes money, it takes the net profit divided by how many shares that's out there and then given to you in what we call dividends. Every 3 months, you will receive dividends according to the profit that the company has. All right, so that's the first step, okay? That's the shareholder position. Shareholders have no liability to the company. It's tax deductible, so $300 for this individual is tax deductible because it's an investment. If you have a 401, if you have money, it's all tax deductible. Okay, so you know who's running the company, you know the product. Do you believe in the product? Do you believe in the individual who's running the company? Those two things, then you give the money is then converted into the stock certificate. Stock certificate or shareholder is the individual who owns the company, but they can't be part of the company all of the time because, after all, they're just investors and they have their own lives. So once a year, the shareholder will have a meeting, and that meeting will govern the hiring or the letting go of the board of directors. So you have board of directors. Their sole purpose is to represent the shareholder. So this shareholder individual has a board of directors that represents them and their investment. Sometimes the shareholder, depending on how much they give, can be part of the board of directors, but 9 out of 10 times, like this individual, they're not. They're just investing, and they have a couple of dollars to spend, a couple $100 in this case, to spend, and their hope is we give them a nice quarterly return, and I haven't talked about the second. I will in a second. And then the second part is later. The board of directors, regardless if it's one stock or a million stock, it doesn't matter. The board of directors represents the shareholder. Okay. The board of directors cannot get paid. It is against the law of the business laws that the board of directors can't get paid. They have to stay neutral and they have to stay representative towards the shareholder with a non-biased position. Their whole purpose is to see the company forward and making sure the company is making money for the investors, for the shareholders, which could be you. Okay, now, once the board of directors is set, you have the chairman, you have the secretary, you have the treasurer, and you have the other seats, then you can move forward and they will then govern and hire the CEO, what we call the officers, the CEO, the CFO, Chief Financial Officer, Chief Executive Officer, the secretary, the treasurer, and HR, and all of those other things. The officer then hires the workers. The workers then produce and make the product. In our case, it is this product here, the Organic Elixir Winery. They will make the product. They will bottle the product, they will seal the product, and then they will package it and then ship it out to the stores who want to hold our product. The workers then, once a consumer out there in the buying world, once they buy this product at the store will give the company back the money for this product. There's a little markup on our end, markup on the store's end, and everyone wins. And that's the way businesses ran. The money that comes in from selling the product into the stores, that money goes back into the company that pays for the employees. And then the officers also is part of that employee status. Then the extra money that's out there, once they're getting taken care of, you have the utilities, you have the insurances, and all of those other taxes and things of that nature. Once there's money outside of that, then goes back to every 3 months, goes back to this individual has 300 shares. The profit coming from that money of the company will go back in dividends towards the shareholder who holds this stock certificate. Okay, once you have a stock certificate, and let's say a year goes by and 2 years go by and you have the stock certificate and you'll say, all right, I'm ready to get out. The value of the stock certificate at the time this person bought it was $1. So at the time they purchased it, it was simply $1. Okay. Once they say, all right, I'm ready to get out, we then can negotiate the value of the company in return to the value of the stock. In this case, let's say, for example, it is $5 per stock. Well, now they bought in at $1 per stock and they're giving back the stock certificate and their 300 shares back to the company, and we're giving them money back. This becomes valuable because now what was $1 buying is now $5 selling. So $5 selling, so 5 times 3 is $1,500 that we're giving back the individual who invested the $300 at the time that they're selling. Okay, and that is the benefit of being a stockholder or an investor. Now, keep in mind, investor is just someone who buys stock in the company and holds it. There's another word that I can give you, trader. A trader is someone who buys the same stock, but in and out real fast. But we're not in the public trade, we're private, so that's not going to happen. So in context, what Investing 101 is, according to the SEC rules for any company who has a product, in our case, this is our product, any SEC rule says that we have to have a minimum of $100. This one particular person invested $300. $300 then gives them the certificate. We get the documentations, the receipts and all of that. They have a copy. And we're now obligated to run the company that's profitable so we can give back to the investor dividends every 3 months. And when they sell the stock, then the company value will be more valuable. And in this case, this example, let's say $5 per, that's $1,500 that they will receive from a $300 investment. So SEC rule says a minimum of $100. There is more that you can give. Like I said, do this example, it's a 300. This is how all corporations should be run. Now, if you're an individual who's trying to figure out how do I raise capital for my company, you have to ask an honest question. Do you have a product or do you have an idea? There's a difference between a product and idea. Idea is simply a startup. Really, it's like you really have to convince someone to invest in your company off of an idea. Typical investors probably won't do that. They want to see some traction, what they call traction. They want to see that somebody else is invested in your company, and they want to see some other things before they invest into your company. So if you have a product, as long as you have a product, you have to then make sure that this product meets a supply and demand issue. Does your consumer want your product? Not the fact that you can produce the product, but does your consumer want your product? If they want your product, like our product is awesome, it is 100% organic, it is no chemicals, there is a market out there and our consumer wants it. The stores want our product, that's why they have it in the stores, and because the consumer who's buying it from the store likes it, because they're making money, we're making money, everyone's happy. That's supply and demand. The demand comes from the consumer, the supply comes from the company who's producing the product or service. Once you meet those two ideas, you then, and I hate to say this, everyone, you have to first start off out of your own pocket making the product. You have to first go out and test it. Make sure people really like it, make sure people really want it. Once that happens, then you can show some evidence and say, hey guys, we have some investors who came in here. We had some people who believed in the product. We have some consumers who actually went and got and used our product or service. Now I'm trying to scale up or grow the company. Now you can go out to the VC market, you can go out to all of the other market who has investors, networking, and so on and so forth. And then you can simply say, hey guys, we got this product, we're up and we're running, we're looking for second, and we're looking for scale. All of the things that I talked about is already there. Come in, help us out, and get it going. That is how you raise money for your company. If you don't have a product and service, it's very hard unless you know someone. If you don't start and have a product or service that meets a certain criteria, and the minimum is a supply and demand, if you don't have the first capital to start your product and get it going, and then have other people believe in you, and then grow off of that, get traction off of that, then it's kind of hard to really get some money to invest into your company. The next lesson is, after you start with your product, okay, after you scale up with some investors to get it to the next level, the third thing, or I should say the next thing in investing 101 is, if you're at that place and you're already comfortably scaled up and your engine is rolling, the next thing I will have to say is innovation. You have to stay ahead of the curve. Innovation. So innovation simply, or another term to say, is, do you have something else in the pipeline to replace this when majority of the consumers purchase or use your product or service? And for us, the answer is definitely yes, and so on and so forth. So if you have any questions about Investing 101, if you have any questions about leadership, if you have any, which I'll probably start doing some leadership, let me make a note of that. I need to do some leadership stuff. If you have any questions about anything, if you need any consulting from me to come into your business and help you out, I have that on my other side of me, is the wellness side of me. So click on that part and you can call me and get in contact with me for consulting, business consulting. And if you are an investor or want to be an investor and you want some more information, just give me an email or go to the website and then just reach out with me. I'll come and sit down with you, or we'll come and have a meeting, and let's go on your personal investing side. But as of today, this is Investing 101. Again, how does the structure from an LLC different? I'll talk about the LLC later. It's much different. All investments is tax deductible. All investments need to understand, is there a product? Is there a service? Is it a supply and demand issue? Do you know the CEO? Do you know that the individual can run the company onto the next level for your protecting your investments? The board of directors is after investments. They represent the shareholder. The board of directors hire the CEO, which I am the CEO of the company. And then the CEO hires the workers who actually produces the product or service. And then the workers submit it out to the stores in our case. And then hopefully the supply and demand, which in our case it is, they purchase the product and the money filters back to the workers. The workers and the CEO are classified as workers. They get paid a salary. Then it bypasses them, and every 3 months, the stock certificate holder will get dividends. And when it's time to exit or to sell your stock certificate, the value of the company will be more valuable at the time you purchase it. Therefore, you can actually make more money that way. So this is Dr. Bagley. I thank you very much. Again, the CEO of Organic Elixir Winery, talking about investing 101. Thank you for joining. Unfortunately, this is ending me, so come back around and listen to it. If you have any questions, comments, concerns, please do not hesitate in getting in contact with me for your own business, for your own personal self, or investing opportunities. Again, thank you very much, and I'll talk to you guys soon. Bye-bye.